So for those who are here now, maybe I can just mention that this webinar is being done in collaboration with Gig Belize, Soul Expressions, Lexi's Popsicle. Lexi's Popsicle is from Kaya District, the National Women's Commission, Hello Body Belize. The National Women's Commission pushes for assisting society in better understanding how gender-based violence and helping women who are in certain situations. And Hello Body Belize, they offer facial products for, not just facial products, but skin products for those who want to look better and feel better. And as we have more people joining us today, we're very grateful that we have this opportunity to be able to help you. So we're just waiting for a few more people to join, and we will get started. Thank you for those who have said hello in the chat. Thank you for joining us very early in the morning. I think most of you are joining from Belize, right, Karina?
Yes. Most people are joining from Belize. I think we can go ahead and start, and then when people come in, I'll just keep letting them in.
Okay, sure. So because this webinar is only for 1 hour, we will start. What we are aiming for is to give you a general knowledge of the basic concepts for accounting. Can you go to the other slide, Karina, please? Mm-hmm. Okay, so I will let Ms. Karina Ball introduce herself.
Hello, everybody. Good morning. Thank you for joining us here. I'm really excited to share some of the knowledge that I've gained over the past few years with you guys. So my name is Karina Ball. I am the founder of GigBZ. If you haven't heard about GigBZ yet, we're just a service marketplace that helps to connect sellers of services with customers who are looking for those services. So a little bit about myself. I come from San Ignacio. I moved to Belize City when I was 18 years old, and I worked in Belize City. I worked first in the medical industry, and then I also worked in the banking industry for a year before moving to Taiwan. While I was in Belize City, I completed a bachelor's degree at the University of Belize, and my degree was in accounting. So that's the reason why I have the background to be able to bring this webinar to you guys. Also, when I moved to Taiwan, I came here to do my MBA in international business, where I learned a lot more and got a lot more exposure to the international market and so on. So I'm really excited to be here, like I said, and nice to meet you all.
Okay, thanks, Karina. As for me, my name is Mayra Torres. I come from Benque Viejo del Carmen. Before I came to Taiwan, I used to work in DSE, Development Finance Corporation, in the legal department. I worked there for 10 years. After that, I wanted to be able to get a higher position, but they told me I need a bachelor's degree. And so it happened that I got a scholarship to come to Taiwan. So I did my bachelor's in international business and trade and my master's in international affairs. So for today, I'm introducing Ms. Karina Ball. She is the one with more in-depth understanding of accounting. And we hope to enable you to just get the basic concepts, to understand the basic concepts. I also need to mention to everyone who's joined, we are recording this webinar. And the reason we're recording it is because if you don't get to grasp a certain concept or some term, we will give you the link so that you can be able to go back into a YouTube private video link that we will share with you. And you can go back and maybe rewatch the video, and something you didn't understand, you can understand a little better. So next slide, please. What are our goals for this webinar? We want you to be able to understand what is accounting, why is it important, and what are the benefits of it for you if you're an entrepreneur, if you're just a student, if you're trying to learn a little bit more about accounting to help someone you know needs that financial knowledge. Karina is going to help us to understand what is the accounting equation and what is double entry accounting. These terms might seem a little vague, but I hope that after the webinar, you can be able to understand how to use these for best accounting practices. Next slide, please. Okay, so what is accounting? And the basic definition for it has been, it is the system of recording and the summarizing your business and your financial transactions and analyzing, verifying, and reporting the results. This may seem a little vague and big words, maybe, but you need to understand, for example, if you're an entrepreneur, and I was mentioning to Miss Taylor. Let's take Miss Taylor for example. She is the owner of a jewelry business. It's not true. I'm just using it as an example. And that she needs to buy the materials, right? She needs to record how much she's spending for those materials. She needs to record how many sales she's making for a certain, maybe a certain sale, how much money she's putting into the bank, how much money she's taking out to the bank from the bank to get more materials. But in general, it's just to give you a basic idea of why do you need to record these transactions. We want to see profit, right? Okay, next slide, please. Yes. Okay, and why is it important? Like I said, you need to track everyday transactions in your businesses, and you can summarize all the activities that you did within a given day, and that this will enable you to understand what happened, the meaningful information that you need to be able to make better business decisions. Next slide. Yes, next slide. Okay, so what I want to say is that you might have joined because for various reasons, right? But we need to understand, why is accounting so important? What are the benefits? Yes, you will be able to keep records of all the transactions that you're doing. You can also see that your business is probably growing, you're getting more sales. You can be able to see, oh, am I making a profit? Am I making a loss? If I'm operating at a loss, how can I make it better? All these things you can see by putting down the information in the proper way. And for example, I want to mention, there were, in a past webinar that we had, there were some entrepreneurs that said, oh, we need to do some, for tax purposes reason, we need to understand what is accounting. Yes, you need to understand for tax purposes. For example, if you want to take a loan from DFC, maybe you want to expand your business, you want to open a business, and then you cannot just go and just show them your exercise book and say, okay, today I sold all these cucumbers, or today I sold all these bracelets. And they will say, okay, I need to know how much of that money that you made you spent, maybe buying a car, making whatever it is that you needed, buying your material. They need to see the proper transaction. And where will they see this? They will find it at the company's registry. So these companies, for example, DFC will ask you for the information, and you need to present it properly to make a loan. If you want to borrow, if you want to get a grant from Beltrade even, they will also ask you for this accounting information. And if you are looking to expand your business and you want other people to invest in your business, they don't only want to see how much money you made. They want to see how much money you spent. Are you a profitable business? Do I want to use my money to help you grow, to make you successful, and I will also be successful? So these things are something we need to keep in mind to understand why accounting is important, right? And now I will let Miss Karina guide us to understand the terms, the terminology of the accounting equation. Thank you so much, Karina. Thank you, everyone, for this time.
Hello, everybody. As we get into the terms and so on of accounting, I do ask that you guys participate with me. So you see the little hand icon at the bottom of your screen. You can answer a question. You help me to see if you're understanding the information that I'm giving you, and it allows me to maybe change my approach if you're not understanding and so on. So whenever I ask you guys a question, or if you have any questions, something that I didn't clearly explain, raise your hand and I will stop and I will answer your question, or I will give you an opportunity to answer my question so that as we continue, I ensure that you're understanding exactly what it is that we're talking about. Okay? So whenever we think about accounting, we need to understand that there's a basic accounting law, right? And this law is always true. It will never change. And this law is very simple. It's basically assets minus liabilities is equal to equity. For us to understand how to use this in our business or keeping our personal accounting, we need to understand what are assets, what are liabilities, and what is the equity. Okay, so that is the first thing we will go about doing. So assets are things that you own. Anything that you own, anything that is owned by your business is considered an asset. So, for instance, things like a house, land, car, machine, inventory, these are all things that you own, and so we consider these things assets. Next, we have liability. So, liability is anything that you owe. So, liability can range from things like bank loans, purchases that you make on credit, or even services that you are paid for before you actually offer the services to the people. All of these things are things that you need to pay or to provide in the future to somebody, and it's not something that your business owns. And finally, equity is the value of what you owe that is left after you have paid off all of your debt. For us to understand this, we will look at Melissa. So this is Melissa. Melissa wants to buy a home, right? And the price of her home is $100,000. But Melissa said, okay, so I buy a home. The home now is something that she owns. So she now has an asset. The asset is the home. It's worth $100,000. However, Melissa realizes that she doesn't have enough money to buy the home. So she has to go to the bank to get a loan for $60,000, right? So the money that she owes the bank, the $60,000, is now something that she owes and it's a liability. And to accounting equation true, we will take away the value of the liability from the value of the asset. And here we can see that what is left is $40,000. This is Melissa's equity. This is her net worth. This is how much she is worth from a financial perspective. So now let's take a look at it from a business perspective. Say you have a business that has assets of $300,000 and you decide to close your business down. Whenever you sell off your assets, you need to first pay off the people that you owe. So if you owe $50,000 worth of things to people, after you've paid that off, you are left with $250,000, and this is your equity. This is the net worth, the value of your business. Okay, you don't need to pay anybody else anything after you're done. So let's recap. Assets, whenever you're trying to identify if something is an asset, you ask yourself, do I own this? If you own it, it's an asset. For liabilities, you ask yourself, is this something I owe and need to pay someone back in the future? If the answer to that question is yes, then it is a liability. You don't own it. And in the end, the net worth, you need to remember that you need to do the math to be able to figure out your net worth. Okay, so let's review and try to classify these. So this is where I need you to give me feedback. Okay, so if you have ingredients, would ingredients that you use to make your products be assets, liability, or equity?
Maybe you can ask someone.
Okay. Okay. Avancia? Hello, Avancia. Good morning. Can you tell me if ingredients would be assets, liabilities, or equity? Avancia? Okay. Avancia, we can't hear you. Can you maybe turn up your volume or make sure you're close enough to the microphone?
Maybe the microphone is not working.
Yeah, maybe. Anybody, can you tell me? Oh, Taylor, can you tell me if ingredients be classified as asset, liability, or equity?
Since you own the ingredients, then that would be an asset.
Right. Ingredients would be an asset. Good. Now let's look at accounts receivable. Accounts receivable means um, money, somebody owes you. So you will receive cash in the future. So somebody owes you this money. What would this be? An asset, a liability, or an equity?
Mhm.
Mm. Faith, can you help me to answer this question?
Sorry, did you say May?
I said, Faith, can you help me to? Oh, Celia. Hi, Celia. Thank you. Celia, so accounts receivable, would it be an asset, a liability, or an equity?
Good morning. It would be an asset because you're going to be receiving money.
Right. Good. Thank you, Celia. Yes, accounts receivable would be an asset because you would be receiving money sometime in the future. Now, accounts payable is the opposite of accounts receivable, right? So it means you need to pay somebody in the future. So what would this be? Asset, a liability, or or equity? How about Amy? Amy, what do you think accounts payable would be?
Liability?
Yes, it would be a liability because you need to pay somebody. You owe somebody this money. Stock is something that you own. So it's like inventory and so on, things that the products that you sell. So stock would be an asset. What about your credit card debt? What would that be? Would it be assets, liability, or equity?
Would that be a liability?
Yes, it would be a liability because you need to pay it back in the future. Thank you, Faye. How about money that you have in the bank? Money that you have in the bank.
Good morning.
Amoria, good morning.
Will that be an asset?
Yes, that would be an asset. That would be an asset because it's money that is your money, right? So um, it's something that you own. I have accounts receivable twice. What about a bank loan? If you take a loan out from the bank, would it be asset, liability, or equity? Mm, Lorna, do you want to? Avancio, hi. Okay, Avancio, would it be asset, liability, or equity?
Avancio, maybe you can check on your phone or your or your laptop. Check the little microphone and click on it. Maybe it's turned off.
For some reason, it's not working.
Try, try,
Guys,
try.
we can't hear you. Or maybe you can also help to type it into the messages so we can see.
That's a great idea, Karina. . . 。 . 。 . 。 . 。 . 。 . 。 . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . .
'Cause. 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 It's a bank loan, so it would be a liability. Thank you, Alessio. Okay, so let's continue. So now that you understand what assets, liabilities, and equity is, we will move on to double entry accounting. So um, most people think of accounting as something happened, right? But what they don't realize, or when they are trying to write down what happens in their business, they would think of it in one way. What they don't realize is that there are two sides to everything that's happening in your business. Um, and we need to record the two sides so that there's balance for our business. So here we have what I call a T account. This is what we use in basic and foundational accounting to be able to see, to actually see what is happening so that we can fully understand how it all works and comes together. So what you need to know is that in a T account up here, we will usually have the name of the account that we are referring to. And everything that happens on the left side of the account, we will refer to it as a debit. Everything that happens on the right side of the account, we would refer to it as a credit. So left side is debit, right side is credit. And it's important for us to understand that asset accounts will increase on the debit side. So whenever our asset account increases, the value of the things that we have as assets, they go up, we will record it on the debit side. And whenever the value of the asset decreases, we will record it on the credit side. It's very, very simple. However, it can get a bit confusing later on, and you will see why. So for instance, if we go back to Melissa's house, we know that she bought a house for $100,000, and the value of her asset, which would be a house, was increasing. And so we will record $100,000 on the debit side of Melissa's house account. Then, if we think about liabilities, we know that liabilities will decrease on the debit side. So it's the opposite of asset accounts. And it will increase on the credit side. So we go back to the first example again, and we know that Melissa had to take out a bank loan, which is a liability, for $60,000. So with the bank loan increasing and it being a liability, it will increase on the credit side. And here you can see it going up on the credit side. For equity, equity is similar to liabilities in the sense that it decreases on the debit side and increases on the credit side. So in regards to Melissa's situation with her house and her bank, we know that Melissa's house, after she paid off her bank loan, she had a value of $40,000 left. And this is increasing on her credit side because of the equity. So if we look at it all together, here we can see double entry accounting, where whenever we record something on the debit side, we need to also record something on the credit side. And they need to be of equal value. So here we have a house for $100,000, and then we have a loan for $60,000 that has been credited, the equity for $40,000. When you add these up, they are equal to the amount of $100,000 that we debited to the house account. Okay? So now, if we look at it, from this perspective, say you go out and you buy a machine for $15,000, right? And you pay for this machine in cash. Usually, you would write in a little book, you would write, bought a machine for $15,000, right? You think, okay, I paid cash for the machine. However, the cash is decreasing, but this is only one side of the account, right? We're only looking at one side. Double entry accounting requires that we need to look at both sides as well. So instead, we need to think that cash will decrease. So as an asset, it will decrease on the credit side. The machine is also an asset, and it will increase on the debit side. Again, we have balance. We have machine on the debit, cash on the credit side. The same amount, so again, our accounts remain in balance. So now it's time for you guys with me. I will give you a list of different transactions, and here I want you to help me identify the accounts that will be affected based on these transactions. So for example, um, if you buy a car on credit from M. Paris for $7,500, which accounts would be affected? It's very easy to think about what's actually happening. You buy a car, you buy it on credit. Okay, so what is actually happening? Which accounts will be affected? Amoria?
Will that be a credit?
A credit, but which accounts? I want the name of the accounts that will be affected, right? So if you are buying a car, right, what will you be given? Taylor?
Okay, so you will get a car. So the car will be affected. It will be on the debit side. And then your accounts payable account will be affected on the credit side for M. Paris because you buy the car on credit. So you owe him.
Okay, thank you, Taylor. You are right. So you are getting a car. So the account that will be affected is actually the car account. And M. Paris is an account payable because you are buying from him on credit. You need to pay him in the future. So you will open an account. Okay. So the accounts that will be affected are car and M. Paris. Okay. Next one. So if you sell goods for cash for $2,000, what accounts will be affected? I only want the accounts that will be affected. You sell goods for cash, what account would be affected? What are you doing? You're selling goods. And what do you receive when you sell goods? Yes,
A debit.
yes, Celia, you can go ahead.
Um, if you sell goods for cash, then cash would be affected, and you would debit that account because you're receiving money.
Yes.
Okay. And the other account?
That would be sales, and you would credit that.
Okay. So we're looking at it from cash and inventory perspective, right? So cash would be affected, you would receive cash, and inventory would be affected. You would decrease your inventory. Okay, the next one.
I
You
have a
pay,
question.
yes.
Salem mentioned that sales would be affected.
Hmm.
Maybe you can let her know why we're not using sales.
Okay. Celia, why we're not using sales is because right now we're just thinking of it from a very basic perspective and trying to match it up with just the basic accounts that we tend to refer to. In later webinars, we hope to add more information. The idea of this one is to ensure that everybody has the information they need to understand double entry accounting as we move on to how to create income statements and so on. Then we will focus more on these other accounts that have different account packages and so on. So right now it's mainly focusing on the accounting equation and double entry accounting.
Thank you.
Okay, Miss Karina.
Next, if you pay by check for
We can't hear you. I think your microphone is off, Clara.
okay, yes, I think it's fine now. Yeah. So if you pay by check for a business lunch with a potential customer, what accounts would be affected? What are you doing? You're paying with a check. for going out to eat with a customer, right? Or a potential customer. What accounts will be affected?
Hmm.
Mm,
If I pay by check, it means I have money in the bank, right?
yes. Yeah. So you pay by check, you're affecting your expenses and your bank account, right? So you are incurring an expense and also you are paying with the money that you have in the bank. Okay? Something to note before we continue is that expenses will increase on the debit side. So it's a thing just for you to take note of because we aren't really going in expenses here. It's just all businesses have expenses, so we do know where they will be. Okay? So now let's practice double entry accounting with debit versus credit. So here we can see that before we said that if you buy a car on credit from Paris, you will pay $7,500, right? And we said before that car would be affected and Paris will be affected, right? So basically, because car is affected, car is increasing. So that would be a debit transaction to the car account, and Paris is a liability, and that would mean that Paris would increase on the credit side. Okay, and for you to identify accounts, sorry, if you sell goods for cash, right? You sell goods for $2,000 cash. We said that cash would be affected, and we also said that inventory will be affected. Now, which accounts would we debit and which account would we credit? Miss Myra?
I think Lorna was trying to tell us something. Lorna? No? Oh, okay.
Good morning. Not
Morning.
not at this moment.
Oh, okay. I
um,
saw I
all
saw the
right.
microphone
Uh,
turn off, so I thought you were going to say something. Sorry.
I'm having a little difficulty hearing the
Um,
volume.
oh, okay, okay. That's good. Thanks for mentioning that.
Okay, so if I speak up louder, can you hear me now?
Um, a bit better. I've been
Okay.
struggling from. All right.
Okay, I will try to speak let's pull out the Belizean in me and speak up a lot more.
Go, Carrie. Go.
Okay, so if you sell goods for $2,000 in cash, we said that cash account will be affected and the inventory account will be affected. So which account would we be debiting and which account would we be crediting? Miss Ksenia, we haven't heard from you as yet. Do you want to give it a try? Tell us which account will be debited and which account will be credited?
Morning.
Morning.
Cash you will debit and inventory you will credit.
Yes, you're right.
Okay.
So cash is an asset and cash will increase and your inventory will be decreasing because you're selling. Okay, the next one is you pay by check for a business lunch with a potential customer. It costs $125. So which accounts would we be debiting and which accounts would we be crediting? Yes, Faith?
The lunch expense would be the credit, and then the checking would be the debit.
Why do you say that the lunch expense would be credited and checking would be credited?
because the you're paying for the lunch.
Okay. Yes, you are right. You are paying for the lunch, right? So yes, the bank will be credited, but the lunch expense will actually be debited so that we have balance, right? So we have to debit the bank because we are paying for the lunch, so we are reducing the money that we have. So bank is an asset, so we have to reduce it on the credit side, and therefore the lunch expense has to be increased on the debit side. Okay, is it clear?
Somewhat.
Okay. Um, So bank is an asset, right? So the money that we have in our bank account, money that is our money. And so if we use it to pay for anything, it's going to go down, right? And before we said that assets would decrease on credit side. So because we're paying for something with it, then we're decreasing our assets. And so actually it's credit to the bank account and then debit to the expense account. Okay. Okay, so now we're going to go into other transactions to see if we can first identify the account that's debited and then the account that's credited, so that we can ensure that we are actually understanding. Because sometimes it can get a little bit confusing based on the different accounts that are affected. So let's say you receive a bank loan for $5,000. What accounts would be debited for $5,000? What account would be debited for $5,000? I also want you to tell me why accounts would be debited. AJ, I think. AJ, can you help me to try and see if you understand which account would be debited?
Morning. It's actually
Morning.
pronounced as ahau.
Oh,
Oh, aha. Okay. Okay.
well,
Aha.
Yeah, I was wondering.
I said it wrong earlier.
um,
It's a very unique name. It's very nice though.
yeah, it's a Mayan word, so with a Spanish pronunciation.
Oh, do you know what it means?
It's supposed to mean like the Lord or like the rulers, and it's related to history.
Oh, like
Chocolate was served only to rulers.
oh, so like Kinichahau, like the Mayan god Ahau.
Yes, yes, kind of like
Okay,
that, like
okay,
Lord
okay.
ruler.
Oh, very interesting. Okay.
Just a different spelling. Yes.
Mm, mm, that I like that. Okay, so can you help us to see which account would be debited?
Um, I believe liability will increase.
Will increase. Yes, your liability will increase.
Yes.
Mm-hmm.
And
So,
the
mm-hmm. Would your liability increase on the debit side or the credit side?
it would on the right hand side, on the credit side.
Yes, it would increase on the credit side. So the account that we would credit would be the liability account for the bank loan. So then what account would be debited?
The assets account.
Yes, which asset account?
Um,
When you receive a bank loan, what do you get? What asset do you get? Yes, Yesenia, maybe you can.
Cash?
Yes. So when the bank gives you a loan, they would either give you cash or they give you money in your bank, right? So then that completes the transaction. And we have cash account that's debited and bank loan that's credited. And both of them will be for $5,000. Okay, so let's try another one. If you buy a new machine for $5,000 in cash, what is happening? What account would we debit? And why would we debit this account? Yes, Celia?
I would debit the machine as that's what's going to be in my account and it's not gonna be going out. Not sure if I explained that well.
Yes, you're right. The machine is what you are going to be debiting because the machine is an asset, right? And when you buy a new machine, now you'll have a new account with new value added to it. And so it means the value of the account will be increasing, and so it will be debited. And so what account would we credit then?
Um, I would create cash. I'm create the cash for 5,000 because that's the money that's going to be going out for purchasing the machine.
Right. So because you're paying for the machine in cash, then you need to debit your cash account to decrease the value of your cash asset, right? So decreasing uh, assets on the credit side. Another thing I want you to note is that whenever you record transactions for your businesses or personal transactions, it's very important for you to write down what we call a little narrative. This is because if you just write numbers, in a few months you go back and you're trying to figure out what happened, it's very difficult for us to remember what the numbers actually mean unless we have like a photographic memory or something like that. But it's usually easier if we write like a little description for us to understand what is actually happening and also the dates so that we can go back and refer to the time and so on to know exactly when we paid out this money and so on. It helps us as we continue to create um, the financial statements, which we will talk about in another training. Okay, so we have a couple more practice and then we'll go into the best practices. The first one is if you sell products or services for $200, what would you actually be debiting and what would you be crediting? Taylor, do you want to help us to answer the question? What account would you be debiting and what account would you be crediting if you sell cash for 200, if you have cash sales of $200?
Can you hear me now? Okay. If you have cash sales of $200, then you'll be debiting your cash as you will increase your cash, and then your inventory will go down, so you'll be crediting that.
Right. So like I said, because right now we are just looking at just understanding what is actually happening in the business. We haven't moved on to like sales, cost of goods sold, and so on. So we're just doing the basic credit to understand what is happening. Like I said, in a future training, we will do a bit more where we will introduce the topics like sales, depreciation, cost of goods sold, and so on, so that we're able to create income statements and balance sheets and so on. Right now, it's just to ensure that we understand what's happening. So yes, Taylor, you are right. Cash will be debited for 200 and inventory is decreasing, so it will be credited for 200. The next one is that you have a credit sale to J. John for $200. So what accounts will we be debiting and what accounts would be crediting? Alright, we have not heard from you. Good morning. And can you help us to figure out what accounts will be debiting and what accounts will be crediting? Hello, Alric? Okay. Maybe you can help us to check it. Increase liability. Mm, so if you are selling to somebody in credit, they will actually owe you, right? So instead of receiving cash, they will tell you, I will pay you later, right? So it's not really a liability that is increasing, it's an asset that's increasing. It's the asset of the accounts receivables, okay? It's accounts receivables that is increasing and your inventory is reducing. So your accounts receivable would be the person, J. John, owing you money for the sale that you're providing, the goods or services that you're providing. Okay, great. Thank you very much, Alex. Okay, so here basically what we covered was just a foundation of accounting. And here you can see that it doesn't require like complex mathematics skills and so on. It's just simply looking at the day-to-day transactions in your business, looking at what happens, and then looking at it from an accounting perspective, trying to understand what is actually being affected and knowing that whenever one thing happens, it's affecting more than one thing, right? And this here will give you the foundation that you need as we continue to add more complex transactions so that you can understand how to record different things that happen in your business. Because we only have an hour today, we figured to focus on this to ensure that everybody gains enough understanding of this topic so that as we move on, we don't have people who are confused because they don't really understand. Okay. So now let's look at some best practices. These are just some things that you should keep in mind as you start doing accounting for your business. One of the most important things is that you should have your personal and your business finance separated. Even though we operate as like sole proprietors and so on, it's really good to have a difference with your business and your personal money so that you can understand how your business is actually performing. And so it is recommended that you separate these things. Ensure that your business has its own bank account. Try not to mix the transactions of your personal account with your business account and try to separate it. So even if you operate out of your home, right, and you're trying to record, say, the electricity that you use, you can do that in a way where you assign a specific percentage to your business and say the business will pay for this, personally, I will pay for this, so that you don't confuse the value of the products and not overcharge or undercharge for the things that you're doing. Remember to always add descriptions to the transactions when you record them. Like I said before, when you come back in a month or 2 months, a year down the line, and you're trying to understand what was happening in your business, if you don't have descriptions, you will be very confused just looking at numbers. Maybe in a week you will remember, but a few months down the road, it's very difficult to remember. And in business, everything is so fast. So everything happens so fast, you need to record the descriptions of the transactions. And remember that if you are paying for business lunches and so on, you should make note of the people that you are paying this for, because later on you will know if maybe you qualify for some tax deductions and so on. So just keep track of also the people that you're doing different things with, so that later on, whenever, like if you're doing your own accounting, then you go to the tax department, you can ask them about this. But if you have an accountant, you can also question them about, does this qualify for a tax deduction, and so on. And finally, remember to keep all of your receipts filed and organized. So if you have the receipts filed and organized, later when the government comes to check your business, or when you need to find something out, you want to prove that the accounts in your business are true, then people refer back to this. If you don't have them filed and organized, it can be a very difficult task to do. Okay, and try to record all cash transactions that you do in your business. And the last thing is that if you buy a large asset, so you buy a machine that you use, record it separately, because depreciation is something that we should keep track of. I believe it's tax deductible, but you need to figure out how it works with your business. So record these big transactions and keep a record of it. Later on, if you don't know about these things, I said we will cover these things later. But for now, this is something that I do recommend that you start doing from now, because these will help you as you get more and more into doing accounting for your business. Yes, Myra?
Just because you mentioned it, and then maybe someone has never heard of the word depreciation.
Oh, okay. So depreciation is just if you have a machine, right? Every year you use a machine. And according to the accounting best practices is that you will not just, so you will record the asset, you bought it, and then every year you need to assign some value of that machine. That machine is losing value, right? So every year you need to take away some of that value of that machine, until eventually it becomes to a point where the machine is not going to be working anymore. And so you need to discard of it. And according to accounting best practices is that as you go depreciating your assets, you should also have another account. This is something separate that you can start investing in, so that when it comes time for you to get rid of that asset, you are already covered with the cost of a new machine. And so your business doesn't incur such a huge cash, or an event that can affect your cash flows and so on. So you're planning for the future. And here is where we can see how accounting helps you to make better business decisions. Okay, so to conclude, we want to remind you that it is your responsibility to become financially literate enough to understand what is the next best decision for you to take for your business. This is important because a lot of times people don't realize how important it is that for them to understand, even if you have an accountant, you need to understand what your accountant is doing, even if you're not doing the little details of it, just so that you can protect yourself and you can protect your business and you can protect your finances. You, at the end of the day, you still need to answer for all the activities that go on in your business. So this is very important. You need to understand what is actually happening. Before we are finished, does anybody have any questions, anything that they would like for me to clarify? Okay, I guess you guys all understood. So I do want to say thank you guys for attending this webinar. Like I said, the idea of this was to ensure that the people who attend have the basic information they need to start doing their own accounting. So it starts as simple as understanding the transactions that happen in your business, and there you can go, moving on to understanding more complex transactions, learning how to develop income statements, balance sheets, and so on, how to find out the cost of the goods that you're selling, and so on. The next session, we'll be sending out. So I collected all your emails, so I'll be sending out an email with the exact date for the next session, simply because we have multiple webinars going on at the same time. So we need to finalize those dates before we send them out to you. But yes, we do have more accounting webinars coming up. We also have some human resources webinars where if you have employees, Yes, Faith. 1 minute. Yeah, if you have employees, you can learn how to train your employees, how to motivate them to be more loyal to your business and so on, and also how to develop different content for social media and so on in your business. And yes, Faith, we will be sharing the recording of the webinar with you so that if there's anything you need to go back and review, then you can just access the link and see the webinar there and go back and review anything that you need. And if you guys have any questions, anything that you need to know, you can feel free to send Myra or myself an email. Like I said, we both have businesses that we are trying to build up in Belize. And for instance, if you need accountants or oh, sure. Yes, Yesenia, we will share that with you as soon as we finalize the date. Yes. So if you need blogs for your business and so on, you can feel free to check out our businesses, Gig Busy and Soul Expressions. Myra has a blog page and I have a website where people who offer services can list their service and get connected with customers. So you can reach more people as a service provider. Okay. If you guys don't have any other questions, it's crazy. It feels like this hour went really, really fast for me. I hope it also went really fast for you. And we will get you that information as soon as possible. We will also be sharing a feedback form. Yes, please.
Sorry, I was going to mention about the feedback form.
Okay.
Yes,
Okay.
go ahead.
Yeah, so we will be sharing a feedback form with you. So we would really appreciate if you give us some honest feedback so that we can continue improving the things that we're bringing to you because we do really want to help businesses understand what they're doing, try to up their game, you know? We've been so blessed with all this education and experiences that we've had. We want to be able to share that with you all.
If I may add,
Okay.
yes. Like Karina was saying, this is not our first webinar for Belizeans. Actually, we had a webinar for Belizean entrepreneurs that was in March. Karina, was it?
Yes, in March.
And we were very happy with the turnout because we were able to give them kind of personalized feedback for each and every one. And that made us very happy. And this one is more like of informative, not so much of in-deep
Interactive.
interaction, right? And why we're trying to let you, the Belizeans who joined us today, become more empowered. If you are entrepreneur, if you are just a student, but you're planning to have that confidence in managing your money, in managing a better business, uh, we want to be able to help. We are not asking anyone for money. We're doing it because we were blessed in the past with free education, and we think it's it should be something that we are able to give back to our community. So thank you for joining us tonight. Today it's tonight for us, Karina and I. It's
Yes.
10 p.m. We hope you have a great day, a great Saturday, and we look forward to each and every one of you joining us for the next webinar.
One more thing I wanted to mention is this Monday, May the 2nd, I did a podcast with the Creative Monday Show where I talk a lot about the journey that I had in entrepreneurship. So if you want to know about all the trials and stuff that I faced while I was trying to build this business that I have, you can tune into that podcast. You can watch it on BBN, I believe, and you can also watch it on YouTube. I will be sharing the information on my social media and sending it out to you guys so that if you're interested, you can access the link to be able to see it. Okay. Thank you guys so much and enjoy your Saturday. Bye.
All right. Thank you, guys.
Thank you so much.